From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming July 30th Forex session in the euro-dollar pair. Well, as you can see, we had three very strong days in a row. And then Friday, we had something very interesting happen as we rallied yet again. We broke this resistance area at, for lack of a better term, I'm calling it 123.50. Although that's probably up for debate by a few pips or so. But you'll notice we poked through it and then formed a long candle, a long wick on this candle, which of course is pretty much a perfectly designed shooting star. Now one would have to wonder whether this is a bad sign for the risk-on trade. Now the risk-on trade was predicated by the expectations of several central bankers to start easing, most notably the ECB, but possibly even the Fed. What I noticed on Friday was the euro failed. The euro formed the shooting stars in quite a few pairs. This is not the only one by any stretch of the imagination. However, at the same time, some of the more riskier currencies, ones that tend to have more beta when we have easy money, namely the Canadian dollar, the Aussie dollar, and the Kiwi dollar, or the COM dolls, commodity dollars, they all had very strong finishes for the session, and in fact finished at the exact highs in the case of the Aussie and the Kiwi, and the dollar CAD pair finished at the complete lows of the Friday session. So what happened with the euro is the question. Well, as you can see, we passed through the first serious resistance area, and we did make a little bit of headway, but right about 124 we just got smacked straight back down. It did finish the day positive, but quite frankly, a break of the bottom of the session on Friday is a sell signal. It's a very valid sell signal, actually. It shows a failure to rise above. Now, why would this be the case? You know, you can draw some other studies, like we can take a Fibonacci retracement tool, and you can see that we stopped basically at the 50, so Fibonacci traders are paying attention. But there's a longer-term fundamental reason for what happened as well, I believe. Granted, the bond markets, the yields did go down in Italy and Spain again, but if the ECB is really willing to take aggressive action to save the currency, as it were, as Mario Draghi had said a couple days before, well, what does that mean? Typically, that means some type of loose monetary policy. You know, they're trying to keep the euro, the European Union, solvent, quite frankly. And as such, it looks like they're going to print money. And anytime you make more of something, the demand goes down. So it's almost like we got a nice risk-on rally, which I believe personally was short covering. And, you know, a lot of people didn't want to be short over the weekend, so I can see where it rallied on Friday. But towards the end of the session, nobody had the fortitude to hold euros over the weekend, and that to me tells me that the market just simply doesn't believe that this is going to work out. And even those that are bullish understand that we are going to see printing out of the European Union, and that of course is going to be very bearish. So by all means, this chart still looks very sickly. We've had a nice bounce, but this looks like it's setting up to sell off yet again. 120 wasn't even quite tested last time we were down here. I firmly believe that we will see 120 fairly soon. Above here, you've got 124. You've got the obvious 125 and 127. You just have a ton of noise above here. And I just find it difficult to think that we're just going to chew through it like we have the last couple of days. To me, this looks like it is setting up for a sell-off. And quite frankly, the Europeans are going to have financial issues for a couple years. I mean, remember, Draghi didn't even come out with some type of solid plan. He just said that he was willing to do anything. The recessions in Europe will make sure that European growth is weak for a couple years. So it's almost like we shifted from panic. Everybody covered this panic euro short position, and then took a couple days to think about it and realize that, hey, this is a fundamental cyclical thing. We have a flag that was formed on this chart right here, suggests that we go down to 115. I still think that's where we end up.